China's aluminium imports surge 35.4%. What it means for the global market. China, one of the world's largest economies, saw its aluminium imports rise by 35.4% year-on-year in September 2025. This increase is not just a number. It signals significant developments for global trade and investment. China's move could have major implications for market supply, prices, and the balance of global supply chains. Key highlights of China's rising aluminium imports. In September 2025, China imported 360,000 metric tons of aluminium, up 35.4% from the previous year. Total imports in the first 3 quarters reached 3.01 million tons, a 5.7% increase compared to the same period last year. Bauxite imports, the primary raw material for aluminium, rose by 38.3%, pushing total bauxite imports to 157.31 million tons, a 32% year-on-year increase. Why are China's imports rising? 1. Domestic production restrictions. The Chinese government has imposed environmental and energy-related restrictions on local aluminium production. This has reduced domestic output, forcing China to increase imports. 2. Imports from Russia. China has increased its aluminium imports from Russia, nearly doubling compared to last year. 3. Global market balance. Rising Chinese imports are affecting global supply because China was previously the world's largest aluminium exporter. Potential impact on the global market price increases. Reduced local production combined with rising imports could push global aluminium prices higher. Supply chain pressure. Industrial countries and major exporters may need to adjust their supply chains. Trade opportunities and risks. Investors and industrial companies may need to rethink strategies to respond to market shifts. Importance for investors and trade professionals. China's strategy has implications not just for the Asian market, but also for Europe and the US. Exporting countries must adapt their production and pricing models to align with China's growing import demand. Conclusion: China's 35.4% rise in aluminium imports is more than a statistic. It is a global economic signal. It reflects China's efforts to adjust its production and trade policies in response to changing global market dynamics. Investors, trade analysts, and industrial companies can use this insight to make informed decisions for the future.